Is there any bank that is safe from a bank run? Is there any bank on the planet that will be safe from a bank run? This is a viewer question that was asked. So I decided to create a video about it. First, we have to understand why does a bank run collapse a bank. If we understand that, we also need to understand what fractional reserve banking is, because that is the reason why it is collapsing. And after that, we can get the answer of, is there any bank that is safe from a bank run? So what is a bank run? Bank run, in a simple word, is every depositor is trying to get money out of a bank at the same time. If that happens, a bank collapses. This is the simple definition of a bank run. But why does it collapse the bank? When banks first started, banks have been known to be in existence from 2000 BC, but those were totally different. That was more of security and all the other factors that came with banking. Nowadays, it is not just because of security, you are having other important things, that services that a bank is providing. How does a bank work? We have to understand that. Then we will be able to understand how the bank run collapses. Why exactly does a bank run collapse a bank? The modern bank, how it works is, you might be thinking, if I give the bank so much money, example, I deposit $1,000 into the bank, what is the amount that it can lend out? You might think that it is the entire amount. No, if that happens, then the bank won't have any money to give the next person who, or even if I come to withdraw, they don't have it. So what they do is, fractional reserve banking, they will hold 10% of the initial amount, and the remainder, for example, if it is $100, they will hold out $10, $10 will be kept there, and $90 will be lended. But what you need to understand is, especially what has driven the problem of Silicon Valley Bank or any of the big banks collapsing, you need to understand this also ties in with the economy. So a simple answer, you have to understand how fractional reserve banking actually multiplies this loan amount. Let's take the example, let's say that Silicon Valley Bank, will get into that. Now this is not the specific thing that has happened, but just to make you understand, because right now there is 0% that they were holding. I'm not joking. If you have $100 deposited there, $100 is what the bank was lending. This is totally wrong, but this is what was going on. This is allowed right now. Strange, but it is allowed. Let's take an example of a person. Example, individual A, me. I go and deposit $200,000 into the bank. $200,000 will be deposited into the bank, and after that, the bank, in traditional terms, it is able to loan out $180,000. That is the amount it can loan out. So person B goes and takes a loan for a house for $180,000. Let's assume he purchases that house, and that amount is given to a person C. Person C is going to deposit that money into the same bank. How much did he deposit? He deposited $180,000. 10% will be again withheld, and the bank is again going to loan out the remainder 90%. Suppose if that is another bank loan, a house loan, another person is coming and depositing whatever is the remainder 90%, and this continues till the amount goes to zero. So now you can understand, initial deposit of $200,000 will be converted into nearly $1 million in loan. This is totally wrong. But you obviously understand this is not right, but this is how the banking system works. So when you think about it, of fractional reserve banking, it's okay, the bank is holding 10%. Bank is holding 10%, but in the big circle, what's happening is, bank is not just holding 10%, it is able to convert the initial investment and 10x it, and they are creating money out of thin air. So this is a big issue. What has happened to Silicon Valley Bank is similar. Example, let's take Lenskart. it received a VC funding. Suppose if it received a VC funding of $100 million, that $100 million was deposited there. They went and got bonds, and because of how the treasury bonds are doing now, the entire thing collapsed, and many people, when the liquidity problem happened, they went together, tried to pull out the money, and the bank cannot survive. Because of how this system works, no bank, as far as in my knowledge, can survive this. If you go and if all the people, investors who have deposited money into the bank, not investors, the people who, all the depositors, go and ask a bank for the money, first of all, they don't have the money because they have lended it out. Even if they could have that money in cash, they don't have it because it's actually 10 times increased, or you have inflated that money and lended it out. So there is no way. If it was just one time, then okay, but what they are doing is, it is happening 10 times, and it's no longer, you can't recover from that. Is India safe? Is any bank in India safe? No, they work on the same principle. Now you might be saying, maybe there are safeguards in place for a bank not to do this. No, this works anywhere in the world, because example I'll give you. If suppose I go and deposit 1 crore rupees into State Bank of India, State Bank of India is going to say that, okay, I can lend out 90 lakhs now, suppose. Now that 90 lakhs is lended out to a person to buy a house. The person, the builder, or whoever he has purchased it from, if State Bank has a limit there, then what's going to happen is, he is going to approach a new bank. So suppose Axis Bank or some other bank, he is going to deposit there. Axis Bank now has 90 lakhs, so it can actually give out a loan of 90% of that. You can see this cycle again continuing. So there is no limit to this. Now another question you might be asking is, what happens when all the banks fail together? The government will have to step in, as it did in this case. Government had to step in, and now HSBC has bought the bank, but it had to step in because if it doesn't, the entire economy is going to collapse. So that's a big problem. Now you might be thinking, okay, the government is just, where is the government getting the money from? No, you are the taxpayer, the middle class is the person who is getting screwed at the end. There is no two words about it. That is how it works. The entire system works that way. They say the bailout, but the bailout is happening to it's always benefiting the highest income group, and who is paying for it is the general people. Inflation is going to increase because of this, and the entire cycle continues. Let's not get into that, but I think you have got the answer already. If example, let's say that a country has 100 government backed banks, and all the depositors in the 100 government backed banks goes and withdraws together, the banks, all of these banks will collapse. And when that happens, the government will have to chip in, and they will have to, because the money is insured to a certain level, that money will have to be given, otherwise the economy will collapse, right? So they will give it back. But how are they getting this money from? The government is borrowing money from itself. So finally the taxpayer is going to again pay for all this. This is the cyclic problem which we are in, and there is no solution, and there is no bank that is safe. This doesn't mean that start pulling out money from your bank. No, I'm not trying to cause a panic or anything. I'm trying to show you the weakness in the system. This system works as long as everything is working, but when everybody pulls out the money together, when the trust is gone, it's going to be a problem. This is the inherent problem of fractional reserve banking, and this is how the system works. If you have any questions, comments, suggestions, whatever you want, leave them in the comments below. Like, share, subscribe. This has been Jace for TopEvt. I'll see you in the next video.